They say never trust a weekend pump. Sunday, the market pumped, and now we're suffering a rejection across the board for the majority of crypto. So in today's show, we're going to assess what is the severity of that rejection and what you should be looking to do next. Is this still a major accumulation zone? Will smart money be entering into the market? Or is this a time where you should just cut your losses, walk away, and come back when the trends ultimately reverse? Well, we'll discuss that and a whole lot more in today's show. Make sure you smash a like button, hit the bell notification, and subscribe to the channel. And let's get into it. You can see over here, Banter bubbles. Majority of the coins, at least on the daily, giving up those gains, turning red. The hourly has started to push back up again. So price is attempting to defend that key $61,500 level. We will assess in the short time frame the significance of that zone and why bulls need to defend that area. So again, guys, smash the like button. The show time is earlier. As you can see, we now 8:45 a.m. SAST, and it will really help to get the show content out there if you do smash a like button, since the recent time change, the majority of people don't know that we've just gone live. So here's the picture on the low time frame. You can see the rejection from the key EMAs, from the 50 EMA on the 4-hour time frame rejecting. We also have the overhead resistance over there at about $63,000, which lines up with the 200 EMA, and you are looking for potential one more sweep towards the downside. As it currently stands, though, on the trade that we took here on Prime XBT, we continue to remain long. We're holding that position. We have elevated those stops into break even. Right now, the position is still up 17%, and we're holding the purple zone, which is the fair value gap, which was set in based off that massive candle that moved towards the upside, retracing some of that move. And this is still, technically speaking, valid to remain long on this trade, but that will start to change if we break below those key lower levels and hold below $60,000. So stay tuned until the end of the show. We'll make sure we go through all of this. Let me know as well in the poll. Vote over there. What are you doing next? Are you going to be buying the dip? Are you bearish and out? Or are you doing nothing and just continuing to DCA into the market? I'd absolutely love to know your guys' input for exactly what you're doing. So let's continue. That's the trade on Prime XBT. Now, one reason that the market is obviously selling off is also anticipation of the major economic events that are coming out this week. We have a lot of key events. We have PPI inflation data coming up tomorrow, so mark that off on your calendar. We have Fed Jerome Powell, which will also be speaking. We have the CPI inflation data on Wednesday. We have retail sales also on Wednesday, and then we have the Fed manufacturing data on Thursday. And there's going to be 12 Fed speakers which are speaking, but that's not the only thing, right? If you look over here, we also have NVIDIA earnings, right? NVIDIA earnings and ETH ETF deadlines coming up. So it's a big week. We'll look at ETH because ETH is currently breaking down once again against BTC and now currently threatening to make new lows on the BTC pair. So a lot of significant things going on. High time frame, where we at? Well, earnings continue to beat, right? The S&P 500 companies continue to outpace their expectations, and therefore you have the stock market which continues to push up higher and higher, and we're very close to creating new all-time highs once again on all the major markets: the S&P 500, the Nasdaq, and the Dow Jones Industrial Average. Coinbase is coming down, obviously trading in alignment more with the rest of the crypto market. So a lot to look forward to in the week to come in the sense of volatility. That creates a lot of trade opportunities for the short-term traders. And if the smart money is actually going to be buying the dip over here within the market, well, then high time frame, that little bit of fear that comes into the market creates an opportunity for you, the viewer at home, to establish those long-term positions. So we'll assess whether that is in fact the case. Now, if you do want to trade the S&P 500, by the way, you can see over here on Prime XBT, you have crypto, stocks, commodities, and forex pairs. Look at all the different things you can trade over here. You can trade the German markets, the French markets. Germany is still creating all-time highs. You can trade the UK markets, also pushing up to all-time highs. So the all-time high trade is an easy trade, right? Every time the market dips, it's a buy the dip opportunity until that high time frame trend starts to shift. So use the link in the description below if you do want to trade on Prime XBT. There is a sign-up bonus for you if you use that specific link. You're getting, here it is, up to 25% off trading commissions, or you can choose the other option, which is up to $7,000 in sign-up bonus. Use the link below, make a deposit, and go train over there, practice on that platform. If we look at Michael Pezzino over here, this is a great analysis that he's had in the psychological phases of where market participants tend to come back into the market. He says over here, we're now entering into the new phase of smart money. So we'll outline why this is the case. And he says over there, but before then, we might have just one more Bitcoin dump, right? So we've outlined the possibility of the lower end being around $50,000 if it's a wick, as long as we're not closing down at those levels. That still remains a possibility, right? So smart money enter into the market near the bottoms during reaccumulation when the rest of the market become incredibly bored and the volume diminishes. We'll look at some of those metrics in terms of things like the volume, how the volume has come down. That's when the rest of the market leave, right? But the smart money stay behind and establish their longer term positions in alignment with the trend, right? And then you got some lucky retail that jump in, trend continues up, and then late retail tend to buy the top when there's major news events, right? So for the most part, those people who were entering as latecomers based on the ETF approval dates, well, a lot of their gains are going to be lost right now, right? Especially the ones that went into the altcoin sector. But right as they're about to capitulate and exit their positions, that's usually when smart money start to reestablish positions, looking for the next major move towards the upside. So is that currently the case? Well, if you look over here, we've gone through 1, 2, 3, 4, 5. This is 5 major corrections within this current bull run. And timing wise, we're pushing towards a longer correction, one of the longest ones that we've had, at least within this cycle. As it currently stands, we're 60 days into this correction. The longest one that we've had within this cycle is 63. In terms of the percentage drawdown, we're exactly on par with everything we've previously seen in this cycle, specifically that being in the region of 20 to 24% drawdowns, this one being 23.44%. So are we closer to the bottom? They're not. Probably. Are we closer to the end of the correction? They're not. Also, probably, at least if we use this statistical data that we have from this year's cycle so far. Now, of course, we must have invalidation zones where that all starts to fall to pieces, and we look for a deeper breakdown. Now, this is going to be a mega key level if you focus on, of course, this order block over here that led to the big impulsive move towards the upside. If we fully retrace that and we start to close below those levels, then you can say that maybe something majorly different is happening and it really is time to start to cut positions and call it a left translated cycle and call it a day. But I think that's incredibly unlikely. The probability suggests that we should continue higher and we should find a bottom very soon. You can see the diminishing volume that's taken place over here. The volume continues to decline. This is indicative of a corrective phase within the bull market, right? As prices come down into key levels, which we have right over here, you can see the very key levels of horizontal support. You can see the 21 exponential moving average, which is acting as support. And so long as we remain above that level, it is bullish. As long as the volume eventually starts to come back into the market and prices tend to move up higher. Even the ETF flows continue to diminish, right? You can see the inflows, when positive, are becoming less and less compared to what we saw previously, and the outflows are becoming more and more. So what does this mean? This simply just means that institutions or the people that are buying these institutional ETFs ultimately are subject to the same emotional cycles as retail. Remember that BlackRock, Fidelity, Vanguard, all of these different ETF businesses are simply just custodians of the ETFs, right? They're taking trading fees based on what retail sentiment is. It's still the retail which are ultimately making the decision of if they want to buy or sell Bitcoin. So when they look at their portfolios and they see it's coming down, they're subject to the same emotional turmoil that a normal retail trader that might be watching the show right now is subject to as well, where they go through the fear and greed. So ultimately, when they see prices going up, they get into that greed phase, and that sends the ETFs going higher and higher, and that shows strong ETF inflows. And the same is true when there's a bit of profit taking and smart money are looking to get their entries. They'll be selling, thinking that ultimately it's going to keep going down more and more and more, and they bail out of their position. So just understand when you look at this, you have to use it in context with what's going on. Again, in terms of that corrective phase with diminishing volume, this is also what we're seeing, right? If you look at CoinGlass over here at the CVD, you can see the CVD is constantly coming down, showing apathy within the market. The market is, of course, losing a lot of interest. You have the funding rates, which are also pretty flat over here. We've had full reset. Look at the highs that were set over here at about 73. Look at the funding rate, how high it was. That's completely diminished. In certain cases, it's even gone negative, which in a corrective move, negative funding is a strong buy the dip opportunity. But we'll assess the data further. If you are a conservative trader who wants confirmation of a bullish shift of trend, stay till the end. I will make sure that I show you where those zones are. If you do want those levels and you also want a couple of altcoin requests to be gone through, please, again, guys, smash the like button. Remember, we're out of our usual time slot. There's more than 2,000 of you live. It will really, really help if you smash the like button to get the show content out there. And then a big reminder, please set your alerts. We are at 8:45 a.m. SAST time. That is the new live time slot we have moved. All right. Open interest also coming down over here, and liquidity is pretty flat. So we'll continue to monitor to see when there's some real spot bidding that's coming in. But right now, there's a lack of a major spot bid enough to get the market going. So it is all corrective. High time frame and macro, how does this all line up with the next 3, 6, 9, and 12-month trade? Well, Mike Alfred says it over here. He says the US basically just bailed out Japan this week to save the treasury market, and almost nobody is talking about it. Most people have no idea it even happened, but it's a very, very big deal. Why is it a big deal? Well, he says hold on to your Bitcoin, gold, and other hard assets because the M2 money supply is going to rip higher, and he says mark it off, right? Willy Woo also outlines that M2 money supply, and you don't even need to use the subjective opinions of others. You can look at the objective data. Which way is this trend moving, right? We went through a strong downtrend over here, and now the M2 has started to pick up again. It's crossing the 0 line, showing that there's expansion. So risk on is coming back, probably when asset managers come back from summer break. We know that usually you go through a little bit of a dull period in the May, June, July part of the market cycle. And that's because, of course, US fund managers go on holiday, right? So they reduce the amount of trading over there. And consequently, we need to watch this chart very, very, very carefully. If M2 money expands, that's showing increased liquidity coming back into the market, and the market will go higher. I'm going to show you another person's opinion, Heinrich, who believes we're in a left translated cycle. We'll get to that in just a moment. And you'll need to look at certain key things as well in case he is correct. I think that M2 money supply going up signifies that it's more likely going to be a right translated cycle, and you're going to see a massive inflow of capital coming in over the course of Q3, Q4, which is going to mean much higher Bitcoin prices for much longer. And this is why you need to position yourself early and not too late. Don't wait for, you can take low time frame confirmations. As I mentioned, I'll give those to you in just a moment where the low time frame trend shifts up, but you don't want to wait for, media confirmation of the bull trend. Why? Well, if you look at this tweet over here, he says, this is the only chart that you need. The only TA you need to do as prices and net worth increase, risk increases as well. But also people's confidence increases. That's what leads to that final phase of the bull market, right? Where everybody has confirmation bias that their analysis has been correct, their investment ideas and trade ideas have been correct. And then they start to do stupid things like mortgage their house right at the final peak, and that leads into those blow-off tops. So he says you need to be max confident right now, max bullish right now, not after the fact, not after price convinces you, because price really is the best convincer, right? And you must not believe in lies. He says over here, he says, you own the coins, but what if they pump and they make you rich? The things you own end up owning you. You need to be schizo-maxing. He says you need to simultaneously hold the most fearless bullish conviction while also being terrified of the fact that you could die at any moment. Okay, that last part's a bit dramatic, but I like the picture that he uses over here, right? This is ultimately where he's showing we're at now. We're kind of in this phase over here between BTC and ETH. So you have proof of the bull, right? Because BTC did start to move into macro bull market. And then he says you need to be all in alts over here. Now, of course, this is not financial advice, and I definitely don't think he's a financial advisor. So I'm not advocating this. I think that just the analogy of the mountain over here is pretty graphic and gives a really wonderful illustration, right? Because most people start to get in over here when alts make you rich. Because why? They've already made people rich at this point, and therefore people think they should jump into alts to get rich off alts. And then they start to do things like buy NFTs for $1 to $4 million to flex their paper riches and become part of a cult-like organization, right? Ultimately, that usually signifies the exact top where everybody feels like a genius. They probably think that they're going to be, the next legacy family name. The average Joe who's now made millions and millions of dollars probably thinks that he's going to be the next big name, right? The next Elon Musk, the next Zuckerberg, and he's going to leave a legacy behind. And consequently, I'm a genius fails down to zero, off a cliff you go, and it's the end of the cycle. Understand where you are within the cycle, right? We are currently within this zone over here. So you're probably looking to establish your longer term position so long as those key levels hold. So there's your range, high time frame range for Bitcoin at least. Let's see, we have the new weekly levels as per Spaceman BTC. So we have the previous week's low. We want to defend that level. We also have the previous month's low. We don't want to get below those zones, which ultimately means that price needs to hold above $59,000, more specifically on a closing basis. If we can do that and we can sustain these levels for the rest of this week, for the next 7 days or so, you'll probably start to see the momentum oscillators across all the various different timeframes trend back towards the upside, reclaim some key levels, and then you're looking for a big higher low in the making, right? So that's what we're looking at for Bitcoin. It's going to be no different for Ethereum. You can see over there the stochastic RSI all the way at the bottom, but ETH does look a little bit more dismal compared to Bitcoin. We'll get onto that on the lower time frames in just a moment. Okay, liquidity, you can see he has all your liquidity, right? Big zones of orders that have been stacked between 55,600 on the bottom side and 74,000 on the top side. So buy orders at the bottom, sell orders all the way at the top over there. There's no guarantee that any of these levels will be hit. Just understand that this is these are the pivot levels, right? Where the psychology begins to switch. So if price breaks below those levels, well, you can imagine the psychology is going to flip mega bearish and you're going to start to move into a strong downtrend. If you get back above these levels over here on the top with the yellow zones, that's where liquidity again is going to come back into the market. Psychology is going to switch and you're going to be in a strong uptrending move. So currently, the CVD delta over here is still negative, showing majority shorts in the market. So we'll watch for that. Let's see, key levels. These are the levels that you need to get above to flip things bullish. I'm going to highlight it in pink over here. So really, you need to get above that zone. That is $64,000. The beauty of, governing the trend as it goes down is the invalidation or validation zone changes every week. We can constantly just drop that, right? What previously was when we said that you started to reject off the range highs over here and you started to get the cross that took place between the 9 and the 18 exponential. We came down, we bounced up. Mid-range was the validation or invalidation zone, meaning we needed to see prices get back and hold above this area to flip bullish. Now, of course, that has moved down, right? Now we have full confirmation that this is where things get bullish again. You need to break back above here. And last week we were looking at the potential for a W formation. It's still potentially intact. It's not out yet, right? There's the W formation. We're looking at a little bit of a higher low in the making over here. We are currently still above the range low. We also recently just reclaimed the pivot level. There it is. So you're seeing a bit of a move over here, reclaiming the pivot level. Let's see if we can get get sustained price action above $63,000, that will increase the probability that we can break above that 64K. And if you can close multiple candles above 64K within this region, well, ultimately, you're going to mount an attack all the way up to 67.5. Probably then you're going to break above the mid-range level, and then you can say that was the high low in the making, and we're looking at a bigger move in play, right? As it currently stands, though, the trend definitely is still towards the downside with multiple lower highs and lower lows, right? Lower highs, lower lows continues to be the name of the game over there, and you don't want to fade that trend, right? We are looking, though, for that trend to potentially shift right over here with the first high low. Then we need to make the next high high, and then the following high low is a very, very strong buy the dip opportunity. So that's your daily trend over there. What could cause that? Well, we have USDT dominance with the daily RSI starting to turn towards the downside over here. So if that does confirm the breakdown over here, this is where you start to get the big moves, right? As USDT dominance breaks down, that tether typically flows, which is a stable coin, flows into the crypto market, right? So let's see if it can all line up. Choppy conditions before the next expansion are typically healthy, right? This is all in alignment with what I've shown you with the diminishing volume, with the ETF flows going negative, with the funding rates pretty much going flat to even in some cases negative. It creates a healthy market, right? He said over here, if we had a steady run up to $100,000 plus with no corrections at this stage, then it would actually be less bullish for the cycle. It would be bearish, and it would then become the left translated cycle, which Heinrich is talking about, right? Now, if you want quick money, you're probably betting on Heinrich's analysis, and you want that left translated cycle. If you're here for the longer term wealth building phase of the market, and you want to make mega gains, well, you're probably voting and hoping for that right translated cycle. At the end of the day here, our job is to move with the ebbs and flows of the market and not to let our own hopes and dreams take over. We need to do what the market says it's going to do next, right? And move in alignment with the market. This is one reason why I personally don't set financial goals when it comes to trading. Of course, I have a goal that I hope I'd hit. Let's say I want to get to $25 million, $50 million, $100 million, whatever it may be. But I ultimately won't let my own bias get in the way. If the market starts, if I'm on my way up to those targets or goals and the market starts to flip in the opposite direction, I'm going to have to cut those positions and look to flip short within the market. So keep that in the back of your mind. He says over here, he's calling for a blow off top. He said a blow off top is not over and done yet. Extreme rally ahead in certain indices and cryptos. Now, if you do see the sentiment shift and we do start to go completely vertical with price moving between a 75 and a 90-degree angle, which is pretty much straight up, that might be an indication, right? Sentiment will become extremely bullish. And he says over here, I'll be called a perma bear as I call for the US market top and market top very close in outside of the US. He says bulls will point to AI as the reason for the market running and Fed liquidity to explain why the markets can only go up. A top in the US markets will be in Q3, Q4. So we're in alignment with that in the sense that I'm also looking for big Q3, Q4, but I don't necessarily think it's going to be a left translated cycle and a blow off top at that point. Understand that I will analyze the facts that are before us and we will adjust accordingly if that is going to be the case. I might flip my bias and be in agreement with him, right? I'm more a swing trader and not a macro analyst that looks at the high time frame, but I understand the macroeconomics. He believes that a recession will set in Q4 2024 and there'll be a fast decline in the markets, which will begin shortly after. So either way, it looks like we're going up. Eventually, it looks like we're going up in Q3, Q4. So here's our picture. This is what we're looking at over here. We need to reclaim those key levels. As soon as price starts to reclaim and hold above the 200 EMA on the 4-hour time frame, you'll have a chance to create your first higher high and then watch for the pullback into these EMAs as they start to turn back up, right? And then you get the pullback into what will hopefully be a golden cross between the 50, which is the red, and the 200 EMA, which is the blue one over there, and prices can start to trend and move back towards the top side. You can see the obliteration over here once again of ETH BTC, but currently if it obviously catches a bit over here, there is a possibility for a high low at the end of the day. This is why I told you guys very, very explicitly over the last couple of weeks, only go long on something like this when you see multiple high highs and high lows and a proper sign of a reversal. Otherwise, ETH BTC continues to remain bearish against Bitcoin. If you look over here at ETH USD, again, in terms of favoring those levels and marking each zone off, this was the previous zone that we needed to get above. Otherwise, we were bearish on ETH USD. This was then the zone to remain above. Now you can start to move this ever so slightly lower, saying that now ETH USD needs to get above 3,238. And then, of course, you are going to meet this key resistance, which is the yellow block. That is your mid-range. We need to get above that zone. Okay, so Solana broke below the trend line over here, but let's see if we get a little bit of a shakeout or a little bit of a fake breakdown. If you see it break back inside over there, that will start to look good. I continue to hold my longs on spot. Remember the longs that were established over here. We continue to remain long on Solana. I will update you if I decide to cut those positions. You can see, at least right now, the market is attempting to bounce back on the hourly. Look at that. On the daily, couple of coins are already starting to fight back, right? Coins with strength. Rune, you have over here, PulseX is actually one of the ones coming up. You have TON over there also picking up, and then BTC. So BTC is still the flight to safety for now. Only really 2 coins in the top 100 that are jumping up. We'll go through some of your requests. Please drop your requests in the chat section below. Let's actually, before we go into them, let's review the poll results. So, okay, what are you doing next? Are you buying the dip? It's bearish, I'm out, or nothing DCAing? I'm going to guess that the majority of you are doing nothing. You've been here before. You're pretty experienced bunch. So let's see, am I right? No, most of you are buying the dip. 46% of you say you're buying the dip. 17% say that this is bearish and you're out. And the other 37% of you are doing absolutely nothing. Always very interesting to hear what the community is up to and see if that is in alignment with the rest of the markets, right? So we'll get into those altcoin requests. If you are looking for a place to trade, right? Check out CoinW. The link is in the description below. You get a sign-up bonus. They're currently doing a battle for $1 million prize pool. So if you use the link below, it will take you to the Champions Arena. Ultimately, it's a trading competition over there. $1 million prize pool, pretty significant. Have a look in the description. So coins that I've been interested in accumulating on the dip, there's been 2. I'm happy to see it come into the support zones over here. Haven't got full confirmation of the reversal. And ultimately, when you come off a big peak like this, sometimes it takes time for that reaccumulation, right? Sometimes you'll see something like this and expect it to chop for some time. Now, the reason I'm telling you this is if it does do that, ultimately you want to accumulate into the bottom of that range, right? So we can mark off those levels. That's going to be over here around this $3.50 to about $4 mark, this zone over here. Any wicks that come into there, if you can pick some based AI up, I think it's a pretty solid play. I'm going to show you why in just a moment. The other one is, of course, PEPECOIN, which you can see is doing very, very well over here, already up 14%. Hit the fair value gap, which was our anticipated target when we started to see signs of distribution. And ultimately, if you get any pullbacks that come into the zone over here, that's also going to be looking good, right? Watch for the high lows. If you see price pull into the $3 region, I think for PEPECOIN, that's a beautiful zone to pick some up for the long term. I told you that they interrelated, right? The two work together. So if you look at this tweet over here from 𝗕𝗟𝗓𝗙, he says, there's a new 2x based AI farm. How does this work exactly? Well, ultimately, you can follow these steps. 1, go to PEPECOIN.io. This is not the Pepe that's listed on the Binance, Bybit, OKX, etc. This is the true OG PEPECOIN, which I believe was established in 2013, if I'm not mistaken. Go check it out. And then you can go to the pre-bridge tab. It's all in this tweet over here. Just search out 𝗕𝗟𝗓𝗙 and you'll be able to find this. I can even retweet it for you. Go to my Twitter, I'll retweet it, give him a like, give it a repost. There it is. Click max, then pre-bridge, accept the transaction. And ultimately how it works is 500 PEPECOINs will get you one based token per day, right? So by staking the PEPECOINs, you get one base token per day. The two are interrelated. I think that I think these are gonna fly in the bull run. I think it's pretty bullish. I've picked some up over the course of the weekend for the long run. All right, let's get into some of the altcoin requests. What are we looking at today? Let's see. Okay, Leroy says the 5.3 theory has never lied. I think what he's referring to for the 5.3 theory is that you get diminishing returns on Bitcoin, and consequently the 5.3 theory would suggest that Bitcoin's ultimate top would be somewhere around $79,000. What I would say to that is I would also look at things like the Pi cycle top to see when you could potentially be topping out. Or it is very, very possible. But one reason that I think it's unlikely is ETH has also received the network effect the same way that Bitcoin has. And I think it's incredibly unlikely that Bitcoin tops before ETH puts in a new all-time high. I think that would be quite a strange situation if ETH didn't. It would be very, very bearish for ETH if ETH didn't take out these all-time highs over here at 4,851 and the cycle was over. So that's my viewpoint, but we can cover that more on another day since I haven't prepped anything for that specifically. Timing-wise, I'm still also in alignment with the usual, I believe it's 42 weeks from the start of the cycle to the end of the cycle, which would be indicative that we should still be topping out much, much later than now. Okay. Back into the coins over here, back into the coins. Okay, so let's go to Arweave. It's been one of the top performers. Let's see how Arweave's been doing. Is there a buy the dip opportunity, or is it just pumping once again? So, okay, there it is. We started to look at it breaking above those highs. It's failed that level, right? This so far would be classified as a deviation. This was your resistance zone coming in at $41.50. We said we need to see it break like the LARP lines over here above, hold and close above, consolidate above that level, and then you could be looking at expansion higher. Failure to do that would mean that there is a possibility for a deviation. But remember, these things take time to unfold. It won't just simply do this, right? In one candle, it will probably continue to chop for quite some time. Think of the Wyckoff distribution schematics when you're looking at major key levels at tops, and then look at the Wyckoff accumulation schematics when you're looking at major levels when you're near the bottoms. And then do that on the low time frames like the 4-hour time frame. If it is going to distribute, you would expect a little bit of chop, right? Probably another spike up to 43 over here for Arweave, and then only would have come down. And even in that instance, I would still say you're probably going to find a macro high low somewhere near the mid-range level, and then you should have continuation. Okay, a lot of very, very bullish fundamental things that have been coming out for Arweave. So it's now not just a file storage coin, right? There's a lot more to it. Let's see, what else have we got? Let's go to WIF. I saw a WIF rejected from the mid-range level, so we'll go to WIF. That was at least based on when I was looking earlier this morning. So there's WIF. Okay, rejection from the mid-range, coming back down over here, mark off your levels, right? So you can get a little bit more granular with your range levels. If this is the main range that's being respected between $2 and on the top side, $3, grab your Fibonacci tool and divide this up into quadrants, right? So there you have your mid-range level, right? So you got your mid-range. This is going to be a significant level that needs to hold where the green area is over here. That is going to be $2.63. So you want to see WIF find support at $2.63. If it does, well, you still potentially then have a high low in the making. So possible trend continuation, and that can be a buy the dip opportunity. All right. Let's see. Let's go back to the top over here. Chainlink is coming into an area of interest. So moving all the way back down over here, we did say that longer term, again, it all depends on what Bitcoin does. Every single one of these coins will depend on whether Bitcoin can hold up above $59,000. If Bitcoin can hold up at $59,000, this becomes a buy the dip opportunity over here for Chainlink. So for those of you who a couple of days ago, were feeling extreme FOMO as prices were moving higher, this opens up the opportunity for you to look for an entry zone, right? Let's look at SUI. Okay. So 𝗠𝗓, we're looking at a long on 𝗠𝗓 previously, saying that it's holding this key level. You have now started to close back below. 𝗠𝗓 does need to reclaim the pink box over here, which is coming in at 99 cents. So we want to see 𝗠𝗓 back above $1. If not, if 𝗠𝗓 can't get back above $1 over here, then you're opening up the possibility that it's going to trade all the way back down to the mid-range, probably gets a bit of the bounce, and then it could even come all the way back down. I would say, again, in alignment with what Bitcoin does, if Bitcoin holds 59K, chances are you're going to see 𝗠𝗓 deviate back into the range over here, and then your target is to trade it back to the top side at 150. So if you're looking for a longer term 𝗠𝗓 hold, this could be a zone where you can get some entries in. Okay, Casper had a huge move up. Let's see if, again, Bitcoin fails 59K. Expect Casper's probably going to break down over here. If not, you can already see our bulls are trying to defend that level. Closing price, once again, back above 11.6, so 0.116. Okay, let's see, Atom. How's Atom doing? Okay, it's kind of in the middle of no man's land over here for Atom. It hasn't really caught a bid the whole cycle. I do think there's better charts out there to trade, but for some reason, if you want to be a very long-term holder of Atom, you can either wait for confirmation, which would be a break above the yellow zone over here at 940 and hold that, and you can go long there, or you could ultimately wait if you get a little bit of a flush back into this zone. That is the main optimal zone to go long. It's going to be at about $6.30. That's for Atom. Okay, before we continue on over there, also, guys, if you do want to trade on DEXs and you want to swap in and out of Bitcoin, check out Volumint. They have their Mint Swap feature over here. It's giving you a 70% reduction in fees compared to what you're getting on Uniswap. If you want to swap specifically from ETH into USD, you're getting 70% less. So for those big players out there, the big hitters that are trading huge amounts, the fees add up. This is a great opportunity for you. Also, if you guys do want to use dBridge, there's also a link in the description below. They're currently doing an airdrop point system. So by using their platform, this is cross-bridging, right? So for example, if you want to go from, there you go, you want to go from BNB chain and you want to swap, let's just say hypothetically BNB, and you want to switch that into USDT on Optimism, you can literally do that. So it goes from cross-coin to cross-chain, dBridge. There's a link in the description below. Use that link. If you use that specific link, you'll also get sign-up bonuses, right? Let's just see, is dBridge in here? I haven't actually looked. If it's not in here, we'll put it in. Is it in there? Okay, Harder says it's in. I'm not going to waste time looking for that, but we will make sure that the link is in. You need to use that exact link, otherwise you don't get the points, right? If you Google it, you won't get the points. All right, let's continue. Injective, let's see, how's Injective doing, right? Injective had a pretty hard sell-off this morning as well. So coming down. Let's just see, have you filled the liquidity over here? Let me just check this quickly. Okay, we have not yet tagged this level. I'll be watching for $20.60 if there's a possibility that Injective will come down into those zones over there, and I see low time frame signs of demand coming in. That could be a potential area at about $20.66. That's a potential zone to get long on Injective. Again, it all depends on what Bitcoin does, right? And really, the bulls need to defend price for the rest of this week. If bulls can survive this week, it will start to look good. Why do I say that? Well, one particular reason why I say that is if you go into this chart over here, we did outline it quite some time ago, and we said you had the moon phases, right? So you're gonna have about another week or so before you get the bull moon, which prints, and the bull moon, every part of the cycle has led to pretty substantial moves towards the upside. Look at that. Ever since the start of the cycle, bull moon, price comes up. Bear moon, slight pullback. Bull moon, price goes up. Bear moon, this one, a little bit of a consolidation. So you want to take the moon cycle at least more seriously when it's in alignment with the trend. What do I mean by that? Well, if a bull moon prints in a bull trend, then it's more significant. If a bear moon prints when you're in a bearish trend, then it's more significant. I mean, more likely, look at that, nailed every single top over here. There's the bear moon, bear moon, bear moon, bear moon, bear moon, sends price towards the downside. So you will be getting another bull moon. So bulls need to defend price action for at least another week. And then hopefully we can start to reclaim and break above some of those key levels, creating that W formation. All right, guys, that's it from me. I'm going to cut off over there. I'll see the rest of you later today in Whale Room. I'll also update you throughout the day. Please set the bell notification or reminder, 8:45 a.m. SAST. Tell your friends, tell your family. I'll see you guys all tomorrow. Have a great day and cheers for now.